All images news videos, short videos forums shopping webbooks, maps flights, finance search tools, feedback AI overview, plus 12 microfinance staff rules and regulations typically address ethical conduct, client protection, internal policies and regulatory compliance. Key areas include ethical conduct with clients, avoiding conflicts of interest, and adhering to lending guidelines. Additionally, regulations often mandate specific staff qualifications, training requirements, and adherence to laws like anti-money laundering, AML policies. Key areas of microfinance staff rules and regulations: ethical conduct. Microfinance staff must maintain integrity, be honest and transparent, and treat clients with respect. They should avoid any financial transactions with clients or their families. Client protection. Staff must ensure that loan products and services are appropriate for clients' needs and abilities to repay. They should avoid over-indebtedness and ensure clients understand the terms and conditions of loans. Internal policies. Microfinance institutions, MFIs, should have clear policies on hiring, training, performance evaluation, and discipline. These policies should align with labor laws and create a supportive work environment. Lending guidelines. Staff must adhere to prudent lending criteria, considering client profiles, financial status, and repayment behavior. They should follow guidelines on interest rates, fees, and repayment terms. Regulatory compliance. MFIs must comply with relevant laws and regulations, including those related to AML, CFT, data privacy, and consumer protection. Staff qualifications. Staff should possess relevant qualifications and experience, undergo training, and be assessed for their suitability for their roles. Disciplinary procedures. Staff should understand and adhere to disciplinary procedures in case of breaches of policy or misconduct. Confidentiality. Staff should maintain confidentiality regarding client information and avoid disclosing it without proper authorization. Whistleblowing policy. MFIs should have a whistleblowing policy to encourage employees to report concerns about unethical or illegal activities. Anti-money laundering, AML. Staff must be aware of and comply with AML-CFT policies to prevent the use of MFIs for money laundering or terrorist financing. Rules regulating consumer microfinance companies. 1. The candidate must be professionally qualified and must have at least 2 years of relevant experience. Delivery models and channels should be designed to benefit clients in line with the institution's mission and Code of Conduct and Ethics International. We must maintain integrity, which includes being honest, transparent, trustworthy, consistent and open, as well as always acting in accordance with the highest code of conduct. An employee should not have any kind of personal financial business with the borrowers and their families. Any kind of false assurances should not be given. Code of conduct for the microfinance industry. 1. MFIs must ensure that the provision of microfinance services to eligible clients is as per RBI guidelines. 2. MFIs should offer only financial products and lending criteria incorporating all relevant aspects of a client's profile. Resource policy for microfinance companies. Discipline should only be engaged with an employee on a performance issue if all other corrective action has failed to subject. Managers are expected to investigate misconduct and proceed through the following steps. A verbal warning should be given to an employee for minor misconduct. MFIs must have clearly defined guidelines for employee interactions with clients. 2. MFIs must ensure that all staff and persons acting on behalf of the Business Code of Conduct and Ethics. With this Code of Conduct and Ethics, ASA International expects to see its members and employees or anyone in association policy on Code of Conduct to provide comprehensive induction training to the employees on policies, processes, and regulations. Emphasis shall be on customer interface code of conduct. While collecting loan repayment from borrowers, the employees should not behave indecently, improperly with borrowers and their family members.